All right, looks like we're live. What's going on, you
What's
beautiful
good?
retail investors? I'm your host, Bill Steele, here with,
But my Sharif.
yes, sir, and we're going to be looking at what is going on with the GME earnings report, as well as how GME has been doing, look at the news surrounding GME, kind of just do a little bit of a highlight on what is going on with that stonk, because we believe it could be of valuable use to you, the beautiful retail investors. All right, let's check it out. See what we got going on here. First off, let's take a look at GME. The market was pretty red today, you guys.
Oh my gosh.
Yeah.
Yeah.
All right. Yep. So looks like we open around 163, close around 120, down 33%. Yes, not a good day for the market in general, but some interesting things surrounding what happened with the earnings report and why those things should be interesting, I believe, will be pretty well explained by what is going on with. I got to switch over here. Sorry about that, you guys. There we go. So yeah, there we go. Nice. So yeah, the earnings report. Sorry, the today we closed down about. Let's see, what was it? 33%. Yeah, down about 33%. All right, so we're gonna go over to this Reddit thread that I kind of went through today, and then went ahead and looked over to see if what the claims being made were valid, you guys. So for those that missed what happened with the earnings report, I'll kind of give you a smooth the brain synopsis. Essentially, GameStop, when they were talking about their Class A common stock, referred to the current short squeeze situation. This is definitely where I'm going to highlight what you guys kind of want to take a look at right here, which is right here. A short squeeze due to a sudden increase in demand for shares of our Class A common stock that largely exceeds supply has led to, and many continue to, extreme price volatility. They're kind of referring to what else has been going on with GameStop. The big thing that should be noted is right about here. Investors may purchase the shares of our Class A common stock to hedge existing exposure or to speculate on the price of our Class A common stock. Speculation on the price of our Class A common stock may involve long and short-term exposures. To the extent aggregate short exposure exceeds the number of shares of our Class A common stock available for purchase on the open market, investors with short exposure may have to pay a premium to repurchase shares of our Class A stock for delivery to lenders of our Class A stock. Those repurchases may in turn dramatically increase the price of shares of the Class A stock until additional shares of the Class A stock are available for trading or borrowing. This is the phenomenon referred to as the short squeeze, you guys. And so what you really want to note is this right here. The market of our Class A common stock has been extremely volatile and may continue to be extremely volatile due to numerous circumstances beyond our control. What they're referring to is the amount of short positions taken on the stock, as well as the amount of stock available and the amount of attention surrounding GME currently. So, stock market in general and our stock price in particular have recently experienced extreme price and volume fluctuations, et cetera, et cetera. They're talking about what we've been doing. The Apes crew, the Lunar Apes squad, all the crayon eaters, and you beautiful retail investors, of course. Yes, we experienced an intraday high of 483. During this time, we have not experienced any material changes in our financial condition. Yes, yes, yes. And what you should note is the earnings report came out, and what's really important about this is that a lot of individuals who critiqued the earnings report and said there was nothing of value to it kind of had this statement to say with regard to they're just defining a short squeeze and this language is common in SEC filings. Essentially, there was a lot of people that were saying, well, there's really nothing special about the GameStop report. There was nothing to be noted significantly. But what this individual went ahead and did, and I went ahead and validated what they went and found was the language within the earnings report, which is kind of crucial to highlight, you guys. Also, if you're watching, hit that like button, give us a little algorithm boost, show us some love, you guys. We're trying to bring you the best news in real time here at the Stonk News Network. So let's get right into the language usage. How often does extremely volatile appear in SEC 10K filings? What they're referring to is the earnings report. That's what they mean by the 10K filings. The phrase is found. What you should note first is total number of 10K filings roughly estimated by number of hits for the phrase report over. So the number of 10K report filings over 5 years is roughly 250,000, 10 years, 513. So this gives you kind of a number to work with when you're putting into context the amount of language used in this particular 10K filing versus, all the, U.S. stock market 10K filings that are made with the SEC. So that's like pretty much all of your, good publicly traded companies. And I use the term good very loosely. The phrase is found in 968 of all of the 254,000 roughly filings in the past 10 years. That's less than, 0.5% of all the filings. The phrase is found in less than 0.5% in all of the last 10 years of filings. How often does the term short squeeze appear in these kinds of filings? Which is a big highlight on our earnings report here for GME. The phrase is found in 58 of all of the 10K filings in the last 5 years. So less than 0.1%, almost at 0.01%. I mean, we're at less than 0.03% of all filings referred to the phenomena, the short squeeze phenomena.
Wow.
And over the 10 years, this is major, you guys. This really shows the kind of the both the emphasis that GameStop is expressing to their investors, if you guys are bag holders on that, as well as the nature of kind of how the landscape is changing. That should be something that should really be noted, because what you will find is that these terms will essentially become hot button items for a lot of companies out there. That's one thing that no one is talking about. No one is forecasting the amount of abuse that potential companies could be using to mislead their investors. It'd be more difficult to mislead their weathered investors, but more particularly their new investors. What I mean by this is when a company talks about the value, they could use GameStop as a case example to mislead investors into thinking that their company, should be something that should be bought. So just be weary, and I always encourage you, do your due diligence on a company before you invest, because they might be using the current landscape of things, how it's shifting, to be tailored a little bit more toward the retail investor to take advantage of you. So that should be something you should watch out for. A lot of companies like to make optimistic statements and then use, I believe it was the 1996 the term, what is it? The forward, that one term that companies use to essentially like indemnify them of any forward-thinking statements. That's right. If you ever see that term, it means that everything that was written in that potential report could be total BS, and it's just speculation. So always remember that when you're reading your DD. But back to the phenomenon. Again, 87 times in the last 10 years, so less than 0.02% of the short squeeze term appeared. How often does short exposure exceeds the number of shares? This one is the big one. So this is what essentially is the metric for the whole to the moon. GameStop could go over, some bold claims, $1,000 a share, $2,000 a share. Some people call the infinite squeeze, where there is no number. This is where that really comes into effect right here. How often does short exposure exceed number of shares appear in SEC 10K filings? Well, as you can see, it's found in 26 over the last 5 years. So less than 0.01% of all filings ever had anything close to this kind of language. The phrase is found in 51 of all of the 10K filings in the past 10 years. So, I mean, less than 0.001% of all filings, 51 in 10 years had this kind of language in it, which is huge to note. How often do there's like a dozen of those cooking. How often do short sellers appear in SEC 10K filings? Let's see. That one's at about 0.14. So as you guys can see, I'm just gonna kind of go through it a little bit quicker here. The language used in this filing is very, as it says right here, rare. So this type of disclosure made to investors is very rare. And whenever you're making a 10K filing, you have to be very careful as a company about what you say. The claims made in a 10K filing, if are determined to be misleading, could be really intense. So we're going to move on to essentially a couple other points on what's going on with this. But I won't get into too much detailed numbers, you guys, about what the short float, what's going on with the short float. If you guys want to see videos of us kind of elaborating on more detailed questions regarding game Stonk, let us know in the comments, because we do have we've done extensive research on this particular stock. I saw your 801 bomb video. That was solid DD. Did not go into effect today. So the 801 bomb video, you could say it's been in effect since last week. As to the how strict the rule has been enforced, yes. Today was a bigger day on it. Last week, we kind of did the 801 bomb update video. If you guys didn't get to see it, make sure you check it out. What that did was immediately put into effect the fact that what is considered the risky hedges, the guys that are doing the most risk, the most, I guess you could say, riskier kind of investments, the guys that are shorting the living piss out of companies, those guys, those hedge funds, were using the fact that there's two. They were using the fact that there was two kind of report times. The proposed one that we discussed, the 801 bomb, where it needs to be essentially the short position of the company needs to be disclosed every single day to the clearinghouse, and that the clearinghouse needs to maintain certain deposits, supplemental liquidity deposits, in order to make sure that they can cover a sudden short gamma squeeze, and they're not getting in trouble and potentially causing a domino effect collapse. And with that, they kind of made it so that there was two ways that you could do report. Anyone can be viewed as a favorite choice correct. Basically, you're saying you report, and we will check when we want. Wink, wink. But don't get caught doing anything wrong. I would disagree, Adam, that it can be viewed in favor of the shorts. What I think, let me sum it hard. What the 801 bomb essentially does is it gives now the clearinghouses the ability to immediately tighten up anything that they see coming that could cause a significant crash, immediate crash. Because what a lot of people didn't really see is, like, if the whole in last month when GameStop really went all, like, when it shot up really quick, what was going to happen if that was let to continue was like a domino effect of crashing, and like a lot of really big hedge funds would have lost so much money that they wouldn't be able to return from. They wouldn't be able to recover. So they avoided that by, kind of putting the pinch on Robinhood, which was, deemed a better option of the two for the people on that side of the coin. Now, the 801 bomb, I think, actually can be viewed You could say it could be in favor of hedges. You could also say that the 801 is actually in favor of the retail investors because what it does is it demands a little bit more accountability from these large institutions. And anytime that there's more accountability from a large institution like that, anytime their moves are being looked at a little bit more closely, anytime that there's increased monitoring or regulation, it's always a good thing for the littler player in that game in any kind of situation. Because now it gives us, as retail investors, a little bit more of a chance to what is the best way to put that? To play the four-dimensional chess game with these individuals, and also it becomes a little bit clear their moves, if you will. And so let's see here. We're gonna go right into checking out what kind of stuff has been going on. There's this Kramer video that came out today that I kind of want to go over with you guys, just so you guys can see. We'll let that ad play. All right, and then
I want to get. I want to talk about GameStop.
All right, let's hear what.
Because I want to get leave us time to talk about
Old
SPACs
boomer
in a bit. But
Krames.
let's talk about GameStop. It's down 11%. Reported earnings. You know what I found so interesting is some of the research, the analysts. It just fascinates me watching them try to sort of make sense of it all. And I'll share with you. We put together quickly here two different excerpts from two different reports. One from Jefferies and one from Wedbush. So here's Wedbush. Our new price target is based upon a 20 times PE multiple applied to our newly initiated 23 estimate, plus an estimated roughly $4 per share in net cash by the end of first quarter 21. So their price target actually goes from 29 to 16. And they point out, by the way, that, you know...
16 to 29.
Yeah. No.
So
29 to... Sorry.
We're raising our 20...
While these guys fumble around with their numbers, you guys...
Right. They down...
I'm going to pause this for a second. You should definitely note that in the earnings report, something that if you missed the earnings report entirely, one, I just encourage you to check it out. Two, GameStop's doing good. They were able to report that their essentially their online sales and what they've been doing with their new initiatives and their vision is working. Long story short, they also included what's been going on with why their stock is so volatile, hence what we kind of talked about earlier for those who just joined us. But I'm going to get back into it. Because he says
the stock and raise the price target.
He says some things about what they're doing
David,
right.
The stock is at 60.
Also, another huge thing to note, you guys, is as GameStop gets more public approval from from major media and the mainstream. If you guys haven't seen our previous video on what it means when Forbes and Yahoo Finance start to embrace meme stonks, it changes the landscape of the game a little bit. So you guys got to look at what is going on, not just directly in the numbers and the empirical data, but you also have to look at what the landscape of how it's being accepted into the common perception of individuals, because that has an effect. Sentiment has a huge effect on stock prices. If you guys don't know too much about sentiment, we can get into it another time. But I love hearing the engagement that you guys are bringing in the comment section. I'm going to check into it here when we get to the end of this video, you guys. And if you have any questions, please drop them in. Definitely give us some love with the like button. We appreciate you, retail investors, a lot.
Oh, no, it's at 160.
Yeah. They say, listen, the fundamentals, we believe investors expecting a financial return can, that the buyers are prepared to pay in the open market. That price vastly exceeds the fundamental value we believe investors can expect. But at the same time, Jim, you got Jefferies this morning just totally revamping the way they value the company. We're pivoting, they say. We're pivoting to a sales multiple.
Yeah.
So we assume e-commerce grows at 50% of 2020 store sales transfer, applying a 20% discount. Sorry about the typo there. We were moving fast here to digital peers in the 4 to 5 range. 3.4 times we get to 175.
I know.
I mean, what are you supposed to do with this stuff?
Well, okay, so I tried to read it without the
Look at those
call,
boomers.
without the
What are you
context
supposed
of
to
the
do with
stock.
this stuff?
And they're doing so many things right. Listen up, Web WSB, Reddit.
He's
people.
talking to the
They
apes.
did a lot of good stuff. They've moved aggressively into e-com. They did a really good job. It's obvious that that Ryan Cohen is the savior. 29% of sales. That's up 191% for e-com. They cut the expenses. They're closing the stores that aren't working. Of course, that's called de-densifying,
Yeah,
David.
trim
I
the
love
fat,
it.
trim the
Term.
fat, baby.
Yeah, de-densifying.
De-densifying.
Every
It's called
day.
lipo,
Our comp store
dog.
sales are down 9.5%. We're de-densifying. Okay.
Right. And
sense.
Jenna Owens, hey, David, a pickup from Amazon.
I don't like this guy.
And
This one right here.
Alphabet. So everything here
I already
is
have- I'm already
positive,
iffy about
and I
Kramer's
can see
scheme.
why people shouldn't
But-
have shorted it at $15.
Yes, you can see why. Listen, it's
I don't
been
like
up here
this guy.
for a long time. Now, Jim, what about the potential for an equity offering?
Well, they did say, listen, they could do at the money or they could do an equity offering.
Yeah.
They at least put it out
The
there.
market, yeah.
Kurt Wolf, a strategic planner, he did an equity offering of his common stock in January. A lot of it. Now, he said, a lot of people say, well, listen, it's just a fraction. But he did raise, I don't know, he did a substantial number of shares
Took
there.
advantage of
$21
it,
million
right?
worth.
Come on, give us some more.
Right when he had seen the half of the January numbers. And I think he just felt, well, look at 90. You could say he's a dope. He sold some at
As you guys can
31,
also see, this is something
on
to
January
hugely note.
13th. He
It was
looked
a
at
red
the
day.
numbers, and it was 31 is he probably got to
Red
31, and I think he was remember the
Fed
strategic
that
plan.
pump that we
He
need.
thought
Yeah.
31 was
Yeah.
high.
I did.
No
I know.
help
Well,
from the
listen, this
Fed.
analyst at Wedbush says important to note since George
Yeah.
Sherman arrived as CEO.
No
in
shout out for
mid-2019,
Powell
the
or
company's net
Yellen.
losses have
You guys
exceeded
saw
$200
yesterday we
million.
live streamed.
Right.
They're
So the financial
testifying.
engineering accomplished during Sherman's tenure is
ran
a
in a lot
testament
of
to his
circles.
leadership
Yeah.
and to the acumen as well of.
All right, yeah, we're done here. We're done with that. So let's go back here and see what kind of questions we got from you guys. Let's see. Finran Citadel. When Moon Willdale. You know, man, something like a moon can't really be determined. It's about the again. I guess the idea of sentiment. How many of us are holding their diamond manos? You know what I'm saying? You got to have those diamond hands, diamond balls in this situation. You got to be able to stare the beast in the face and sniff its fiery, flaming, gassy breath and just say, "I love it," and just hold, bro.
I don't even open my trading apps today. I just
Yeah.
I don't want to look at that shit.
What's up with Darkpool Data? Texas in the house. Yes, sir. Texas in the house. Yeah, sold some at 340, bought back at 115. Nice, Michael. Hell yeah. Did I miss anything? Just got here. Earlier we kind of talked about what was going on with the essentially with the earnings report and the kind of the language that we use in the report and what made this particular GameStop earnings report different than all of the other SEC 10K filings in the past that were referred to as reports. Possibly Ryan Cohen becomes CFO. I honestly think there's zero chance it happens. What people on Reddit are hoping for. Yeah, wouldn't be bad. It wouldn't be a bad move. Is Beardman on left just there to vibe with us? Love it.
This is the GameStonk expert and the creator of the 801 bomb phase. So this is his goal. I'm gonna be unpacking some things on silver soon.
Ooh, yep. We're gonna be
And
talking about
yeah, we're
silver.
gonna get into that. I've been unpacking that, and something looks very, very interesting.
Yeah, we'll have to talk about that in the next stream. Guys, if you don't
Absolutely.
know, we have another stream starting at 8:30 Central Standard Time. That's in about 30 minutes where we're going to be going over kind of what happened with today's crash, as well as what happened, why the market is crashing and what's going on with that. So we're going to go over to GME here. Yeah, you guys, it was just a rough day for GameStop, but just in general for the market as a whole, it was rough. Like, yeah, look at that. Let's go here. Yeah,
Disgusting.
down, bro, down. You know, hot ETFs, Dow Jones. All right, let's go down over here. Let's go back to GME right here. And then drop that bad boy down. Where is the comment section? There we go. They're trying to scare us. I ain't scared. I buy the dips, sell the rips. Yes, sir.
Nice.
Yes, sir. RC is gonna be CEO. Oh, for sure. Love the station. Is there any merch on the way? Ooh, yes.
Yes, sir.
That's a big question. Merch is on the way if you guys want to support by repping the SNN stuff. We have some really cool T-shirts, hoodies, that say, some of the To the Moon merch is what we got. Also, the Stonk News merch. We got some hopefully in the near future, some custom bandanas. Yeah, the website will actually be launching soon, guys.
We're working hard at
We'll
that.
kind of give you more of an update on that as we go by. If you don't already follow us on Instagram, we're pretty active on Twitter, Instagram. We have a Facebook, we have a LinkedIn page. Of course, liking and subbing and sharing with other retail investors goes a long way. You guys, we've grown so much, and we can't thank you enough. Why are we getting radio sounds from GME? They're just gonna watch while their houses burn down. Anything they could do to make this take off. No, man. Gotta have the diamond hands, baby. Gotta have the diamond hands. But for those of us who are just getting in, for those guys that are just getting in, we kind of went over a little bit with what's going on with the language surrounding the recent 10K filing, the earnings report. We went over what happened with GameStop today, and we kind of went over the not so dense, more like the lipo video that Jim Cramer just put out surrounding what's going on. I find it so funny that the real Wolf of Wall Street is like out here like making a killing off of the tubis. Dude's awesome. But yeah, if you guys have any questions, that kind of gives up our synopsis. I'll throw in our Instagram name here. They can't afford to get it done for market manipulation. Yeah, market manipulation is exactly correct.
Catch 0x16. I have the same type of ideology you have. I've been real zen with everything and just kind of not looking at it at the moment.
Yeah. Oh, for sure, man. Yeah, he's doing a lot better at that than I am. I'm
Oh.
kind of like cracked out, like just running through my phone when markets are open.
Here's some tea, man. Chill.
Yeah.
It's gonna be okay.
Yeah, but let's see here. It's the outgoing CEO grumbling out written statements because Cohen replaced everyone except him and the other guy. Yeah, yeah. I would say that it should be big to note that the e-commerce sales are up. Cohen's name is backed by some data. That was big for me. Let's see. Would we need a big catalyst to start the squeeze? I mean, of course, catalysts always help, right? There's never an instance where catalysts would not do good for a squeeze to be initiated. But I will say that what will be really big and important to you guys, what could potentially start a serious squeeze, would be, of course, the DTCC actually, exercising what they've been talking about in the 801 bomb. If they were to essentially require a supplemental liquidity deposit from the guys shorting the piss out of GameStop, that would be massive. I mean, that would be the catalyst that you're looking for, Willdale. Yes, I am also jacked to the tits as well. But guys, that's going to be it for us. We wanted to hop on here for about 30 minutes, discuss what's going on. We will be live streaming every market day, Monday through Friday, and potentially some bonus streams on Saturdays, where we're going to be going over the biggest news talked about in the office here at SNN. We are onboarding a couple more junior analysts and one hopefully two really big industry retail investors, guys that have been trading for 20, 30 years, that have a lot of wisdom to impart on us kind of younger guys. We're really excited to see that the company is growing massively, and we're really looking forward to what we're going to be able to bring in real time, because we're definitely synthesizing real news actively going on. We have some exciting projects coming up for our Real DD series. We're going to be taking actual trips to the company sites of some of these ticker symbols that you guys are interested in, and getting to know, their CEO, their executive staff, all the way down to the janitors.
Yep.
We want to know the kind of work culture that's going on in these places. We want to know, like, I want to know what kind of toothpaste these guys are brushing their teeth
What's
with.
he
Man.
having for breakfast?
Yeah, exactly. Sample that stool while I'm at it. I'm trying to know everything about these guys.
That's a really important thing to do.
Because that's important for you. That's important for what decisions we make as retail investors when we are deciding to throw money at a stock. When we're deciding to take a position. Or potentially short. I'm not much of a bear, but I am not averse to making money. So I'm excited to explore, again, more of the playlist options. We do have some exciting stuff coming out with the new educational platform that we've been developing to help give financial education, financial personal literacy, essentially an education program to take you from 0 to 100. If you don't know anything about how to leverage credit, basic stuff, like how to leverage credit, what a stock market is, what a security, what an equity securities actually is, how company and corporate structure operates. Maybe we'll even go through and do an entire how to file or form an LLC in your particular state, how-to guides. We have a lot of really, really great friends who are industry leaders in tax mitigation strategy. So we're going to be bringing you guys how to mitigate taxes. If you're out here making all these, gains, going to the moon, holding all these bags, how do you reduce paying Uncle Sam? That's definitely something you always want to look out for. These are how people build wealth in the digital age, in the 21st century. We're going to be bringing a lot more to you guys on that here in the near future. Like I said, we're leveling up the staff, we're leveling up the company. We're looking at getting an entirely new dedicated studio space. We already have a small one, but we're looking to expand. But there's some exciting things in the future, you guys. Thank you so much for showing us the love. Hit that like button, share with your friends, be sure to subscribe. That's all from us here. We are going to be live again in about 30 minutes to discuss the market crash. Thank you so much, you beautiful retail investors. We'll see you next time, guys.